and we're going to look into the strength of the US dollars. Why will the US dollar be very, very strong and going into the next half of the year? There's so many dynamics happening in favor of the United States dollars, from geopolitics to global markets to economies to AI. We just mentioned now the United States in global markets seems to be in the front of the AI and only competes with China in practical AI. All these factors and contributing to ensuring that the United States dollars is benefiting from all this condition. Could the US dollar keep rising from this moment? And the dollar index DXY has climbed to around 100 to 101, its highest level since May 2025, up roughly 3% since the start of the year and 5% since late January. A sharp reversal from the dollar's declines through 2025. The core bullish case, sticky inflation, is keeping the Fed hawkish, not dovish. Headline PCE inflation accelerated by 2.1% year over year in May, with core inflation still elevated at 3.4%, making it harder for the Fed to declare victory in court. The Fed held rates at 3.50% to 3.75%. On the 17th of June, Kevin Warsham first meeting as chair, and markets are now pricing meaningful odds of a hike rather than a quarter sharp reversal from earlier expectations. So the widening rate differential are pulling in foreign capital as the Fed holds firm, while other central banks, ECBs and BOJs have moved differently, especially the European Union, and the gap in the yields makes dollar dominated assets more attractive to global investors. This yield differential dynamic is described as the clearest and most durable driver of the current move. There is still also under which is US exceptionalism. He's back in the narrative: resilient US growth, a solid labor market, strong returns in US equities and treasuries continue to draw global capital, reinforcing the dollar's position as what one strategist bluntly called the cleanest dirty shit in a world full of risk, from wars to slow growth elsewhere. And also debt finance stimulus paradoxically supports the dollar too. Massive government borrowing to fund tax cuts and also suspending would normally weaken the currency, but because the US bonds pay higher yields than European or Japanese equivalents, that borrowing keeps attracting foreign buyers rather than scaring them away. The final one is a safe haven. The dollar still continues to be a safe haven, just like the gold is a safe haven. Let's look at all the geopolitics and financial and economic reasons why the United States continue to be the dominant currency globally.
It seems like it's shaping up to be. If I look at the second quarter and the small amount that we've had in the third quarter so far, I think there's three things that have really driven dollar strength. The first has been the conflict between the U.S. and Iran. The second part has been, the AI trade has largely remained intact, and so that's more of a story about U.S. exceptionalism, given that most of the major companies on the forefront of the AI boom are denominated in the U.S. and corporate earnings have remained exceptionally strong. And then third, which is the most recent development, has been a potential shift in Fed rate path to a more hawkish approach that's focused on price stability rather than, also recognizing the downside tails to growth, because largely the labor market has been very strong.
Yeah, let's talk about the Fed for a second here, because we just got the Fed meeting minutes this week, which was interesting. Is the Fed as hawkish as markets thought a month ago?
Well, I think we'll see. My instinct was that the moves that we saw immediately after Chairman Warsh's first press conference was a little bit of a positioning-led move. We've seen a decent reversion in pricing, but we still have 6 or 7 basis points priced for July, and I think we have a little bit more than a full hike priced for the end of the year. I don't think we know yet. What we do really know is that the committee has shifted materially more hawkish in terms of where they've put their dots in the dot plot from the summary of economic projections, which we get roughly quarterly. That has gone from having no voter putting in a hike which was in March, to in June having 9 voters for at least one hike, if not more.
Big change.
And so, I think the jury is still out on Warsh. His comments over in Sintra were a little bit less hawkish than what he presented at the press conference. What I would say, or the way that we're thinking about it on the desk, is that the distribution of outcomes where the Fed does shift to a more hawkish policy are still underpriced.
Yeah, and Moore's comments were coming at a conference that he attended. Just sticking on that inflation and the Fed side here. Obviously, the dollar trades a little bit with rates. So the Fed raises rates, the dollar gets stronger. People want to own dollars; they get a higher return. If the Fed doesn't raise rates, does the dollar just not as strong?
Yes, but there's levels to that statement. I think that for the dollar to have a material appreciation from here, it's, one of two things need to happen. Either there needs to be a hawkish shift from the Fed, or there needs to be a more dovish shift or a less good growth outlook for rest of world. So far, we haven't really downgraded our growth forecast for rest of world, but we have seen a pretty dovish shift in places like the ECB, places like the BOE, where you had very high expectations for rate hikes in the sort of peak fear from the US and Iran conflict. That has almost completely been taken out in terms of pricing. So what I would say is if you look at rate differentials, particularly if you strip out inflation, so we call that real rate differentials, those actually still point towards the dollar having appreciation value going into the end of the year, even if the reaction function is just that the Fed is on hold.